New York Stock Exchange, 60% of the program happens here. New MMTs, you got two stocks that are gapping up to meet the qualifier is 1.00 ratio, and you only have two. Doesn't look good on the opening bell. How do I trade that opening bell? How do I get that when they come down and they hit that bottom now, and you see that violent turn, you get in, and if they come down and test that double bottom price action line, and immediately everything has to have a green action buy bar next to the red bar, 2 times greater than the previous bar, and that is the qualifier, and you will do that way. Now, on the gap down list, you got VIV, got to be some kind of news on it. MCP, another miner, earth miner, down 315 on the day. So this is the gap down list on the NYSE right here, my friends. BHP, Hilton, all of these little stocks. McDonald's down $1.23, had a great move. Be a great trade off of that bottom. How do I get that order? Gapping down $1.23. I'm going to give it out at 79 1/4, 78.75. That's that McDonald's trade up and off of that bottom for a short-term gain. Low beta, but still has good price action. Okay, so basically we've got a much longer list. And how do we know that when this bull reversal that we called 6 weeks ago, and how do we know when a bottom is put in? Price volatility, both off the bottom and the short side of the tape, will remain at elevated levels. As today is Wednesday, it is hump day. We are going to look to see if that accumulation off that bottom comes in, and in the short term now, that everything has a price action volatility to certain levels of selling. So when we were calling the top, of course you were so overbought, it needed to come tumbling down, and I'm sorry, and we're right. Now, anybody watching this video, you want to go back and look at the truth, go back and look at the truth and sit there and scratch your head. Oh, boy, oh. Well, yeah. 6 weeks of it, because of irrational bull tops, need to be identified and how to profit over a longer period of time outside of an intraday period. And that we're going to hit some levels on that left elbow gap down, and you're going to burn that clutch up off of there, and there isn't much going on here right now. 2 lousy stocks. Okay? 2 lousy stocks. That's what you got. Now, gap downs are to accumulate. They run them up because the shorts barrel in at the bottom, and you look at trading the opposite against that bear on that short at the bottom, because the majority of the crowd, just like they love to buy at the top, oh boy, instead of shorting 6 weeks ago, now I want to short the bottom. That's where price volatility increases off the bottom, because those people try to gang up. I'm sorry, they should have been short a few weeks ago, but they're not. And when markets do put in short-term bottoms and you get reversal bottoms, it's because the majority of that crowd love to do what the public loves to do. Always 17 days late. Always. When you should have been shorting the market up at the top, that the rest of the short sellers start to move in down at the lower levels, and that's where you look for that intraday knife hook reversal, is to squeeze them up once they're out. And we've shown it day in and day out, day in and day out, day in and day out. Is that once that mechanical process takes place, say goodbye, because that's when you're transacting that short between the bear, the bull, and we all know that the public loves to buy the high and short the bottoms. That we know, because we've been doing it all these years, because that's how the public mind works. They have no system. They have no clue on what they're doing, other than they've got all the answers. Naturally, they always do, in their view. But there is a lot of price action volatility that people cannot deal with. And it's a great tape off the bottom. It's a great tape that, once again, as we have said for several weeks and several individual trading days through each one of them 5-day periods, is short that top, learn the mechanical part off of that bottom. Then when they get up there at that top, they're coming down and making lower lows. And trend cycles make lower lows. They just don't go straight down and that's the low and it's all over. No, there's a process to it. And the process is that you trade against the bear at the bottom, because that's how you get that move off of that bottom when you're buying in that negative ratio. And that's part of what goes on as far as the range today in each name that we cover and each one that we're making a market on. Is that same trade management is always the same. If you see any small gaps up in pre-market, it is to hit that short up at that high on that first red reversal bar next to the green bar. You can come up, but then you get another reversal bar right to it, and learning how to scale in and add to a position, whether it's a short up at the top and or buying and accumulating off the bottom for that move up. That is price volatility intraday, something that most people don't know how to deal with and will not know how to deal with. And that is their shortcoming, and that equals your profits, MMTs.